Hey, welcome back. I know it's been a few weeks since we've been on with you all. Markets had a big run since then. I know, Quint, you've been putting out a lot of content. You just wrote an article and piece this week kind of summarizing what's going on. So why don't you give everybody an update of what's happened in the last few weeks?
Certainly, Logan. So obviously, markets had a really big bounce since the October lows. Seasonality-wise, that's fairly textbook. Historically, that markets tend to struggle a bit in October, find a low, and then make a strong move into the end of the year. So, but the thing to note, and we've already touched on this a lot, is how negative it got just from sentiment. A lot of that's anecdotal. There's a lot of, obviously, data to support the money that has moved out of markets and into treasuries and money market funds. In fact, some of the greatest that we've seen in history, but anecdotal in the conversations we're having with clients, et cetera. So it simply got too negative, and that's what Mr. Market does. Mr. Market likes to discourage as many people as possible. So just when you think all hope is lost and markets are selling off, we wake up that following Monday, we have a big run, and really what's happening, and again, we touched on this, but interest rates have begun to come down. Now, why have interest rates come down? Because inflation seems to be coming down. The Fed held off on any more hikes. That was sort of predicted, very well known in the futures market. But their commentary had more to do with the data, and we continue to see the data coming down.
Yeah,
so
CPI, Consumer Price Index, and then PPI, Producer Price Index, both were lower than expected this week.
Not to mention, we're hearing from companies. This morning we heard from Walmart, and they're talking about the slowing consumer. And the actual CEO made a comment that he thought deflation was going to come around the bend. Now, what he's referring to is inventory buildup. This is my opinion, my assumption from just cyclical business, is when the consumer slows down, inventories build. They have to get rid of those inventories, so they cut prices. Great for consumer. What the investor has to be cautious of is hearing things like this or seeing things like this and going, oh my, that's bad for stocks. When conversely, what we're seeing is economic weakness or lower inflation is actually good for stocks.
Because it all comes back to the Fed.
All comes back to interest rates and the Fed. Lower interest rates does two things in our world. Number one, makes cost of debt much more affordable, thus increasing profits for corporations. It also has to do with valuations. We won't go down that rabbit hole, but ultimately when interest rates are down, it makes valuations of stocks look more attractive.
Good. Well, I know you had another CNBC hit this week, and you had some pushback on what you were saying about Apple, so tell us about that.
So you want to make enemies in this world, even those you'll maybe never meet, talk negatively about Apple, right?
Yeah.
Listen, we have folks that have had Apple for years. They have no intention on selling Apple. I've, over the years, owned some Apple. I only recently sold some of my personal Apple shares for this reason. But, the reality is, in my opinion, and just analysis-wise, a stock like Apple is very richly valued here. It's very, very highly valued, meaning not the price, not where it is. Somebody looks, it's expensive. Well, you could have a very high-priced stock and it be cheap, like it look valued, inexpensively. Apple's trading at a multiple that you're paying, which is far in excess of what the projections are for it to grow. That's number one. Number two, Apple did a unique thing. Now, they did it when rates were really low, but they levered up their balance sheet, and I'm never a big fan of debt. I'm never a fan of debt personally, but I'm not a fan of it corporate-wise either. So, yeah, go on CNBC. I'm asked to give some selections. I talk about, Apple, a great spot to take some profits and look at some other names for those profits to move into, and holy cow, you'd have thought I insulted somebody's mother. So it is what it is, but that's what we look at, right? We look at top down, which is what's going on in the macro environment, try to determine what our thoughts are on inflation and interest rates, and then we look bottom up and we try to select where we're going to go for clients based on valuation and what we're willing to pay for certain asset classes.
Okay, just to kind of finish off, anything to do before the end of the year? We're rolling into the holidays here.
Yeah, I think you have to check yourself. I'm not a day goes by I don't have a conversation with investors, clients, or otherwise, prospects, you name it, and most people are are not aligned appropriately in this market. They're just not. I mean, again, this is anecdotal. This is my opinion. You can look at the studies of money moving into money markets, et cetera. I think it'd be really interesting if you want to do this at home. Look at 1993, 4, and 5 when the Fed took rates from 3 to 6%. And the money that moved into treasuries there, and then look at what happened to markets from 95 through 99. I don't know if we'll follow that playbook, but I see a lot of money moving out. So I think people have to look in the mirror. They have to kind of check themselves. How do they feel about the economy? How do they feel about the world? And then really try to dislocate that from how they might feel or view or act when it comes to markets. Have a plan. I mean, this is key. Whether you're a client or not, have a plan, an objective, a goal that you're striving towards. Don't let the daily noise influence that. I can't stress that enough. So as you head into the end of the year and we go into 24, great opportunity for a review, a great opportunity to kind of realign those, make sure your allocation is in place, and have a wonderful Thanksgiving if that's what you celebrate. I know we have a lot of international folks, so have a wonderful Thanksgiving and happy holidays.